Welcome to the deep dive, where we cut through the noise and get straight to the insights. India, it's just a land of vibrant celebrations, isn't it? Festivals, huge family events, and of course, the wedding season. It's epic.
Absolutely epic. A massive market, so steeped in tradition.
Right, but how do you actually build a really dominant business in that space? It seems so fragmented, so culturally specific. How do you scale tradition?
Well, that's exactly what we're digging into today. We're looking at Vedant Fashions Limited. I haven't just found a niche. They've arguably become the leader in Indian wedding and celebration wear.
Okay, so that's our mission for this deep dive. Unpack their latest results. Q1 FY26 just came out. But also, maybe more importantly, figure out their business strategy. What makes them tick? How are they so dominant when so much is still, local or unbranded?
And we're basing this all directly on their official releases, the July 2025 investor presentation, and the board meeting outcome for those Q1 financials. Pretty solid sources.
Yeah, definitely. And for you listening, this is basically your shortcut to understanding a really fascinating market, a kind of counterintuitive business model, and of course, the key financials of a major player.
Let's jump in.
Okay, let's unpack Vedant Fashions. The fabric of their success, you could say. They're based in Kolkata, started back in 2002 by Mr. Ravi Modi.
Mm.
And their whole thing is Indian wedding and celebration wear. Men, women, kids, the whole family. They position themselves as like a one-stop destination.
Right. Sort of aspirational, but still focused on that value for money idea, which is key in India.
But it's the dominance that's really striking, isn't it?
It really is. They are, factually, the largest company in India for men's Indian wedding and celebration wear.
Yeah.
And that's across the board revenue, OPBDIT, Pinke Pan, you name it.
Wow.
And Manyavar, that's their flagship brand. It's basically the category leader. Branded Indian wedding wear, pan-India presence. It's quite an achievement in that segment.
And they're not just sticking to menswear, right? You mentioned Mohe.
Exactly. Mohe is their women's wear brand, and it's making serious inroads. They're highlighting it as the largest women's brand by number of stores with that pan-India reach. So significant scale there, too.
Okay, but the thing that always gets me, the really interesting bit, is this no discount policy, specifically for Menuvar.
Yes.
In a market like India, where everyone expects a sale or a haggle, how does that even work? Doesn't it just drive people away?
You'd think so, wouldn't you? But it's actually genius positioning. It's not just about price, it's about the message.
Okay.
Think about weddings in India. They're huge aspirational events, non-negotiable purchases, often. By saying no discounts, Manyavar is signaling we are premium, we are exclusive, our quality justifies the price.
Ah, so it takes it out of the commodity game.
Precisely. It makes buying Manyavar feel like acquiring something of inherent value, maybe even status. Customers learn not to wait for a sale, because there isn't one. That anchors the perceived value right at the full price. It's pretty rare in retail anywhere, let alone India.
That makes sense. Okay, so beyond that, they've got this whole multi-brand portfolio, different price points, men, women, kids.
Covering the bases.
And they talk about aiming for low obsolete stock, which in fashion is like the holy grail. They use a 52-week design collection model. That sounds intense. 52 collections a year.
It is intense. And managing that without ending up with mountains of unsold clothes points to something else they do exceptionally well, their tech and supply chain.
Right, you mentioned that.
Yeah, they call it a tech-driven, unique supply chain and inventory management. It includes an automated replenishment system right down to the PIN code level.
PIN code level. Seriously.
Seriously. It allows them to manage inventory with incredible granularity, responding to what's actually selling in very specific micro markets. That's how they tackle that fragmented, unorganized market structure.
Okay, that sounds very sophisticated. But does relying so much on tech and franchises create its own problems, like consistency across all those stores?
That's always the challenge with franchises, right?
Yeah.
But their model is designed to mitigate that. It's asset-light and franchise-led. They provide the brand, the tech, the automated stock replenishment.
So the franchisee gets what sells locally, reducing their risk.
Exactly. It optimizes stock for everyone. And being asset-light, not owning all the stores themselves, means less capital tied up, which contributes to their really high cash conversion ratio. It's a big plus financially.
And the scale is huge now. What were the latest numbers?
As of Q1 FY26, it's 1.78 million square feet of retail space in India. That's 670 exclusive brand outlets, or EDOs, across 245 cities and towns.
Wow. And international, too.
Yep. 14 EBOs overseas, USA, UAE, Canada, and the UK. So they're definitely catering to the diaspora and beyond.
Can you quickly run through the other brands again, beyond Manivar and Mohe?
Sure. So Mandivar started it all, 1999, mid-premium men's and boys. Mohe came in 2015, mid-premium women's. Then Twymev, that's 2019, more premium men and women, aiming for an upscale feel. Mebaz was an acquisition in 2017, strong in South India, mid-premium to premium, kind of a one-stop shop. And the newest one is Diwaz, launched just this year, 2024.
Right, the Gen Z-focused one.
Exactly. Value to mid-premium for men, with a sustainability angle. So you can see they're really trying to slice the market very deliberately.
It's quite a journey. First international store in Dubai in 2013, then the US in 2016, listed on the stock exchange in 2022. And they've picked up a bunch of awards along the way.
Yeah, the industry recognition is definitely there.
All right, let's get to the numbers then. Q1 FY26, how did they actually do?
Pretty strong, actually. The key highlights compared to Q1 last year: retail sales, so that's sales by their customers in the stores, grew 23.2%.
That's solid growth. And same-store sales growth, SSSG.
Also very healthy, up 17.6%.
Nice.
Revenue from operations was up 17.2%, and profit after tax, PP, drew 12.4%.
Okay, good top line and bottom line growth. And that gross margin.
Yeah, that's impressive. Still industry leading at 66.9%. That really shows their pricing power, that no discount strategy paying off.
Let's break down the actual figures a bit. Revenue went from about 2.4 billion rupees last year to 2.8 billion this Q1.
That's right. INR, 2,398 million to 2,812 million, so up 17.2%. Gross profit went from 1,624 million to 1,881 million, up 15.9%. The margin itself dipped just slightly, from 67.7% to 66.9%.
Okay, slight dip in gross margin. What about EBITDA?
EBITDA rose from 11,147 million to 1,214 million. That's a 5.9% increase. But the margin there saw a bigger dip, from 47.8% last year down to 43.2% this quarter.
And Pat?
PAT climbed from 625 million to 703 million, up 12.4%. Again, a slight margin compression from 26.1% down to 25.0%.
That's a fantastic growth, clearly. But those margins, gross margin down a tiny bit, EBITDA margin down more noticeably. What do you make of that? It looks like a classic growth phase pattern. You're pushing hard on expansion, opening stores, maybe investing more in marketing for the newer brands like Diwaz or Twymev, perhaps some initial supply chain costs for scaling up. So short-term margin pressure for long-term gain.
Probably. Given this strong revenue growth and the fact that their gross margin is still incredibly high for the industry, it doesn't scream problem. It suggests they're strategically investing, accepting a bit less profit now to capture more market share and build those newer brands for the future. It feels more like a growth story than a profitability issue right now.
Okay, that makes sense. And operationally, anything else to note? They report as one segment, right?
Yes, just branded fashion apparel and accessories. The results were approved by the board end of July, standard limited review by BS R&Co, LLP, seems like typical government.
And they issued some stock options to employees.
Yeah, a small number, about 5,415 shares, standard practice.
Oh, and that amalgamation point.
Right, important for comparison. Many of our Creations Private Limited was formally merged into Vedant Fashions, effective April 1st, 2024. So the numbers for the previous period, Q1 FY25, were restated to reflect that structure. It just ensures you're comparing apples to apples when you look at the year-on-year growth. Helps keep the story clean.
Got it. So, looking ahead now, what's the strategy?
It seems pretty clear. They want to leverage that huge Manivar customer base. Lots focus on upselling and cross-selling within the portfolio. Get the Manivar customer to also buy Mohe or maybe trade up to Twymev.
Makes sense. And the newer brands?
Big potential there, they believe. Growing Mohe further, scaling Twymev, establishing Diwaz, strengthening Mebaz in the south, that seems core.
Plus, more stores.
Definitely. Continued retail expansion, both in India and picking their spots internationally. Alongside that, targeted marketing to keep building the brand appeal.
And acquisitions.
They mentioned a disciplined approach. So they're open to it, but it sounds like they'll be careful and strategic, not just buying growth for the sake of it.
Okay, so connecting that to the bigger picture, it feels like they're positioning themselves well for, evolving tastes in India, but also that huge upcoming festive and wedding season. That must be massive for them.
Oh, absolutely crucial. A huge part of their annual business happens in that season. They need to be ready to capture that demand.
And the international side keeps intriguing me. They've got a foothold.
They do. USA, UAE, Canada, UK. It definitely hints at bigger ambitions, maybe tapping more into the global Indian diaspora or even finding ways to position celebration wear for a broader audience eventually. It's an interesting space to watch.
So, summing up this deep dive, Vedant Fashions. Impressive Q1 growth, that unique no-discount play with Manyavar really defining them, a smart multi-brand strategy, and fundamentally strong financials, even with those slight margin dips indicating investment.
Yeah, they're clearly a leader in a big, culturally significant market. It's fascinating how they've blended that tradition with very modern, tech-driven business execution. They're not just selling garments, they're selling, well, aspiration, cultural identity, backed by some serious operational muscle. It really is a blend. Which leaves us with a final thought for you, our listener. Vedant Fashions is dominant in India. They've got this growing international footprint. What's next? Could they tap into maybe deeper cultural shifts within the diaspora? More specific regional collections, perhaps? Or could they even somehow introduce the idea of Indian celebration wear to totally new global audiences, people looking for something unique and expressive?
Exporting the celebration itself in a way.
Yeah, maybe. Something definitely to think about.